That, and with me as always is Sonia Shenoy. Sonia, good afternoon. So off to a good week. Actually, it's carrying on from the last week's momentum, it looks like. Sensex Nifty hit fresh new highs. So that sentiment is really being carried on. As far as the mid-cap universe is concerned, well, that's also contributing well, and therefore the broader market health is also looking good, and the market is clearly not dependent on a few big boys only. So as far as the contribution chart is concerned, HDFC Bank, Infosys being a big leader as well. That's really adding a lot of thrust, and not to forget big boy Reliance Industries as well. A special mention, though, of one particular stock which is in focus because of the news developments and dearth of also the certainty on the fundraising plan is Yes Bank. So take a look at that particular counter. There were some big announcements from the board meeting which was conducted last week, and therefore the stock is down almost 6% in trade at the moment. So the uncertainty continues. Even though the London-based Cytax plan is there on the table, it has not been fully confirmed as yet. Sonia.
Absolutely. Hi, Nisha. Afternoon. So, the other stock that's on our radar right now, which is really surging higher and has kick-started earnings season on a good note, is Infosys. It's up almost 5% right now on huge volumes. I just want to bring it to notice of our viewers. The volumes are almost 3 crore shares that are being traded on Infosys at the moment. And this after an audit committee and an external team found no evidence of financial impropriety and dismissed all the allegations made by the whistleblower. Also, in its Q3 results, the company has raised its full-year revenue growth guidance as well. So 2 thumbs up coming in because of these issues. Here is Rima with all the details. Rima.
Well, in one line, there is no earnings beat. Earnings are in line with estimates broadly, but there is a sentiment beat, which is what the street likes. So first on the numbers, constant currency revenue growth is coming in 1% on a sequential basis. That's in line with estimates, 9.5% on a year-on-year basis. But that you would see has narrowed compared to what they delivered in the prior quarter, as well as in the comparable quarter of last year. But there are a few positives in the numbers. For one, the company has upgraded its FY20 revenue guidance to 10 to 10.5%, but investors actually expect the company to deliver close to 11% growth for the full year. So it's not changing the overall revenue estimates. But the biggest positive is the fact that the company has got a clean sheet on the whistleblower investigations. The company said that there is no evidence of financial impropriety or executive misconduct. And remember, the stock was an underperformer compared to its peers in the last 3 months on the back of this particular overhang. Also, the company's stock was trading at a big valuation discount to TCS. It was close to about 25%, which is now getting narrowed. Operationally, there were a few misses, so the margins were a miss. Margins expanded by 20 basis points, lower than street expectations of a 50 to 60 basis points expansion. BFSI retail outlook was muted. BFSI growth at just 6.2%, and that too includes an acquisition. If you'd strip that out, the number would be a lot lower. For retail, the growth was just 2.5%. The company said growth was impacted by the number of store closures. But net, the street likes the upgraded guidance because it tells you that this conservative management is feeling more confident, and they like the clean sheet. So if you see the brokerage verdict, most of them have a buy rating with a target price which is in excess of 800 rupees.
All right. Thanks so much, Rima, for that. And of course, Infosys, a big contributor in today's market. But another pack and the pocket that we are concentrating on is the cement space, and that is moving higher today as well. And sources say that Andhra Pradesh and Telangana are likely to hike prices this week. Our colleague Nigel D'Souza tells us all about it. Nigel.
Well, that's right. Producers in Andhra Pradesh and Telangana in particular, they are likely to increase prices later this week. In the first week of January 2020 itself, they'd gone ahead and pushed prices up by around 30 rupees odd. However, demand wasn't that great. And I understand that, in fact, the actual increase was to the tune of around 20 rupees per bag. Now, the companies are bracing themselves because post-Pongal, that's post the festive season, they're trying to push through another price hike, and that could be to the tune of another 20 to around 30 rupees odd. So you need to track the demand on the ground, whether or not these price increases can sustain. But for the time being, the street is reading this positively, that South-based companies, they're going ahead and they're trying to push through some of those price increases. In fact, earlier today, we spoke to the management of Dalmia Cement. Let's hear out what they had to tell us.
Since last 2 months, now cement demand has started looking up. Up to October, there was a degrowth of cement demand, and from November onwards, there has been some improvement in demand in certain parts of the country, and now it looks like that whatever, say, prices which might have gone down, they may again come up, and cement prices may, and cement prices per bag may get the right price. Looks like that 7 to 8% better than the month of November. As well, if I talk of YOY, then also it may be 5 to 6% better than December 18. January also, in certain parts of the country, there is demand revival, and we expect that again 4 to 5% higher than the month of December. And if these actions again in rural economy built up, etc., takes up, then I think we can see in totality for the year FY20 roughly 2 to 3% growth.
All right, that's the word coming in from Dalmia Bharat. The important takeaway is that cement demand has definitely picked up, and in Jan they see demand about 4 to 5% higher than what they saw in the month of December. But moving on, Lupin is under pressure. Some of its plants are actually under the US FDA scanner with some regulatory concerns. Ekta joins in now to tell us what these concerns are. Over to you, Ekta.
Well, Lupin, in fact, is in focus on account of one of their plants, which is their Tarapur facility, getting classified as official action indicated, or OAI. So what an OAI classification means is that the probability of a warning letter increases on that particular facility. Now, this is an API unit. It received 3 observations by the US FDA in September 2019. And however, the company says that the classification of OAI won't disrupt supplies or existing revenues. But remember that this particular plant adds to a long list of other regulatory issues that Lupin is facing. So, for example, in September of 2019, their Mandideep facility received a warning letter from the US FDA, and we had their Somerset facility in March 2019 classified as official action indicated, plus in April 2019 and May 2019 respectively, the Pithampur Unit 2 and Goa facility were had an official action indicated status, which meant that the warning letter issued to them in 2017 continued. So this adds to a long list of regulatory woes for Lupin, and hence, even though it might not contribute as much to the revenue, it's definitely a sentiment negative. Separately, there was additional news on Lupin, where their Nagpur facility was inspected by the US FDA in Jan, and they received 2 observations for that particular plant.
All right, that's coming from Lupin. Thanks, Ekta, for that. With that, we'll slip into a short breather.